while the Fed look like they're pretty much done. I mean, inflation keeps falling, but I think the bond market's having to suffer from too much issuance of new bonds because the governments are having to pay the interest on the debt, and the interest rate has gone up so much that they have to sell more and more bonds, and the bond market doesn't like that at all. You'd see the same in crypto, anything else. When there's excess supply, the price collapses. So that's what's going on right now, which I think only exacerbates the chance that things get worse, and therefore perversely things get better for the markets, because they look forwards to, oh well, if things are written now, they're going to have to start cutting rates, and they're going to have to start doing quantitative easing next year.
The synergy between economic recovery and crypto activity is projected to intensify. Raoul anticipates that as economies regain momentum, crypto markets will thrive, fueled by increased spending and demand for tangible assets within the digital economy. This prediction is based on his latest research, which suggests that despite prevailing market conditions, there's an underlying momentum primed for acceleration. In a rapidly evolving landscape, marked by interplays between global economies and emerging technologies, Raoul discusses his investment strategy with a keen eye on Bitcoin and crypto, and believes the forward-looking indicators in the market will bring massive gains in the coming months. He also believes central banks will play a critical role during this season as well, as their printing practices always play a pivotal role in the crypto domain. And as economies decelerate or interest rates soar, the likelihood of rate cuts becomes more plausible. This isn't confined to the United States alone, but will affect markets globally. Let's get into the latest interview with Raoul as he gives his latest prediction for Bitcoin, the crypto market, and where his investment strategy is aimed in 2023. Don't forget to share your thoughts and comments down below, and leave a like if you enjoy the content we do here.
Crypto tends to be forward-looking, so it follows the liquidity cycle, and the liquidity cycle is kind of how much the central banks are printing, really. And so we kind of know that as economies slow down, or rates get too high and the economy slows down, the probability going forwards of them having to cut rates goes up. So our liquidity indicators at Global Macro Investor back in June started bottoming. And that's when I bought ETH added to my ETH into that low. And then the rest of our indicators kind of bottomed in October, just as the markets bottom, and it worked really well. And so the crypto markets have been forward-looking. ETH seems to be more forward-looking than Bitcoin right now. And so they have been rallying on liquidity conditions easing somewhat. And these are global conditions, not just the US. So we had the Bank of Japan increasing their balance sheet. We had the Bank of England and a few others here and there, and other liquidity indicators doing that. So that drove that forward. Usually assets are the last things to bottom. So the stock market usually bottoms first. So like right now in the US, the stock market bottomed in October, but the housing market's still going down, right? And we're seeing it with Rolex watches as well, because people's discretionary spending has gone down and nobody's got any capital gains from trading. Everyone's just taking losses all day. And while the Fed look like they're pretty much done, I mean, inflation keeps falling and everyone's kind of lost sight of that. But I think the bond market's having to suffer from too much issuance of new bonds because the governments are having to pay the interest on the debt, and the interest rate has gone up so much that they have to sell more and more bonds, and the bond market doesn't like that at all. You'd see the same in crypto, anything else. When there's excess supply, the price collapses. So that's what's going on right now, which I think only exacerbates the chance that things get worse, and therefore perversely things get better for the markets, because they look forwards to, oh well, if things are written now, they're going to have to start cutting rates, and they're going to have to start doing quantitative easing next year. I learned over time that the best strategy is have a long-term time horizon, and then when these kind of business cycle troughs, in crypto they're 80% down move, but they're in that long-term uptrend, right? And the magic is to add to your positions every time it hits the long-term uptrend and everybody hates it. That's really where you make all of the money. So what we do is we look at these indicators with a year-on-year rate of change. And what you're looking for is liquidity to stop going down. And then it starts ticking up, and maybe it crosses through zero, or not that, but just on its way up. Usually that's the signal that liquidity's bottomed. And it's probabilistic. So it's not always 100% certainty, but it's like, listen, the price has collapsed. All the worst news in the world is out. Everybody hates each other on Twitter. Everybody's short. Everyone thinks everything's going to go bust and it's the end of the world. that's usually a good time. And if the liquidity indicators are saying, hey, listen, the absolute worst is now behind us. Also, it's really interesting because a lot of people get caught with present day conditions, their narrative, and then saying, well, why is the price not lower? Particularly like in the stock market right now. People are like, why isn't it lower? There's going to be a recession or whatever. It was all priced in last year. We had an 80% bear market in crypto plus. I mean, if that wasn't a recession, then I've no idea what is. The NASDAQ was down 35%. That's a regular kind of recession in the NASDAQ. So it all happened last year because markets are forward looking. They could see what was going on. They could see that the Fed jacking up rates at the fastest pace in history was going to cause an economic slowdown. Now, I'm not Web3 or crypto agnostic. I'm a passionate believer and want to educate people and help people understand that journey and help institutional investors to corporations to anybody use this technology because, we all passionately believe in why. But at my level, I want to make money out of it too, right? It's this magic thing where you can kind of help change the world and also make money at the same time. So all I do is just look at a couple of things. One is I use Metcalfe's law, which is like how you value networks. And it sounds like it's very fancy, but really it's some proxy of number of active addresses and the value that gets transacted on that chain each week or each month. And you find that once you use a measurement like that, pretty much all of the chains are valued accurately versus that activity. So I look for that and you think, okay, well, what's got more adoption capability right now, Bitcoin or ETH? Now, Bitcoin's changed somewhat with ordinals and other stuff, right? But really, ETH is where everybody's building everything. And it's a large asset. So then I just look at the chart of the Bitcoin ETH cross and, this bear market, ETH did not sell off versus Bitcoin. In the bigger picture, it's really been in this kind of wedge pattern that usually looks like it's another breakout to come. So that kind of makes fundamental sense to me because there's more activity on chain. And so I think price drives it. I then started looking at other assets. And the one that I noticed got a lot of adoption, a lot of developers, a lot of activity was Solana. So I look at the Solana ETH cross and it's like, hell, that looks like it's going to break out too. So my allocations are really something like 80% ETH, 20% Solana, and there's other bits and pieces there here and there, but really it's a concentrated bet. I could change my mind if things change. I could be 100% Solana. I could be something else, but this bit, the kind of middle to top tier, is an easier trade than trying to find the next big thing.
The stock market's plight provides an interesting parallel to the cryptosphere. Raoul believes we'll actually see a supply-induced price collapse in the crypto world, but will lead to a positive market response. He underscores that market participants often focus on present conditions and narrative, losing sight of the forward-looking essence that drives crypto markets. Pal's investing philosophy capitalizes on these dynamics, advocating for long-term strategies during business cycle troughs. By adding to positions at long-term uptrends, investors can harness the potential for significant gains, even in the face of prevailing negativity. He emphasizes the role of liquidity indicators, which, when moving upward after hitting a bottom, signal a potential reversal and serve as key markers for opportune entry points. What do you think about the latest interview with Raoul Pal? And what are your thoughts on his insights regarding the future of cryptocurrencies and their impact on the global economy? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.